Hello, and thank you for watching this educational video on the concept of building your own privatized banking system through the use of specially designed life insurance contracts, or SDLIC. The purpose of this video is to help you achieve a better understanding of certain key topics that can substantially improve your personal or business economy. We believe everyone who has positive cash flow and good habits with money deserves to hear about how a specially designed life insurance contract can be utilized as both an alternative asset class and a cash flow tool. If you believe in minimizing risk in your portfolio and want your money always working for you, then building your own privatized banking system could be a fit for your financial picture.
Habits are the key to financial success. For many of you, it would be prudent to make your assets work for you by putting your money into asset classes that generate uninterrupted compound growth. To understand this concept, you also need to realize that there are two different types of return you can create with your money. Internal return is what an asset generates through its performance, both with income and appreciation over time. External return is rarely considered, but entrepreneurs and institutions take advantage of this economic benefit all of the time. Think of it as your return on cash flow. When you properly utilize your money and leverage your internal return by getting more of your money to flow into your control, the results are magnified. Both internal and external return are important to changing the trajectory of your financial future. Along with solid cash flow, these concepts are the foundation to a strong financial picture.
For several years, our firm has been doing research to determine why today's traditional banking system doesn't appear to benefit savers as it used to over the past 30 plus years. Since banks have long been a place for people to store money, the reasons behind this action were simple. Banks provided safety of principal, liquidity through access to your money at any time, and growth through interest on any account balance that you kept at the bank. Unfortunately, the relationship between banks and savers has changed dramatically, with savers now earning less than 1% on their checking accounts and below inflation on other forms of savings accounts. It feels like the Federal Reserve is punishing savers and increasing the risk associated with inflation, taxes, and longevity in a saver's economy. We want to help our clients realize their good money habits of saving first actually provides them with more flexibility, access, and control of their money, whether you invest or spend those dollars. That's up to you. After all, it is your money.
Whether someone saves money on a monthly basis or accumulates money in big chunks due to financial windfalls, you're going to store that money someplace safe until allocating it between investments or current spending needs and wants. The process of storing money in a safe place is called accumulation. The process of deciding whether to invest or spend your savings is called utilization. Our firm wants to challenge people to think differently when it comes to the accumulation and utilization of their money. Through extensive research and a broad knowledge base on different financial institutions, we believe that there are specific types of life insurance companies that offer specific types of life insurance contracts with certain beneficial features to a conservative saver. A properly trained financial professional can use these contracts to offer a conservative saver a tremendous alternative to traditional banking methods. Please understand, we are not actually creating a real bank for our clients or communicating that life insurance companies are the same as a bank. Rather, we are attempting to design a financial vehicle that can mimic certain banking functions in one's personal or business economy, like financing big ticket purchases or controlling where your cash flow is stored.
Not all life insurance companies or products fit the SDLIC model. Certain components must be present for an SDLIC to be optimized. Become insured by a mutual insurance company with strong financials. Use a participating whole life contract with design flexibility. The contract must allow for access to the policy cash value through policy loans while the policy is being capitalized, the first 5 to 7 years of the policy. Use a contract that allows for policy loans that do not interrupt the compounding of the guaranteed interest and dividends within the policy. Very few life insurance companies have all of these components. It is important to work with a firm who truly understands and continues to educate themselves on the nuances of this strategy. Several of our advisors have received advanced education on this strategy through different industry organizations.
A financial strategy, such as implementing a SDLIC, is not appropriate in all financial pictures. It's important to understand what type of situation should give someone pause before moving forward with SDLIC. If someone or a family is not good at saving, this strategy is not a good fit. Good habits with money are a must for SDLIC to be effective. Without them, this strategy would fail before it starts due to the temporary illiquidity in the design. Any person setting up SDLIC needs to understand that they will not have access to 100% of their money for 5 to 7 years, depending on the age and health of the insured and the capitalization by the owner. If someone needs access to all of their money immediately, this strategy may not be a good fit. That is why it is so important for a client to work with a seasoned financial professional who looks at your entire financial picture before making any recommendation. Understanding the tax rules is critical as well with SDLIC. Proper access to the cash value through policy withdrawals or loans can be accomplished if effective policy capitalization occurs. This may require additional income tax advice. Also, consider that if the policy is surrendered or if it lapses while the insured is still alive, there could be negative income tax consequences. We want you to make sure the financial professional you're working with understands the section of the IRS tax code that pertains to permanent life insurance, which is IRC section 7702.
Funding a life insurance policy in a specific way potentially optimizes the owner's income tax situation and creates access to the cash value that is substantially increased beyond normal policies. Our intention is to analyze your sources of capital and determine how we can maximize the contract's funding in the first 5 to 7 years. With certain mutual insurance companies, this policy design creates an accelerated level of access to your money, potentially as early as 30 days from the time you make a premium payment, depending on the company. And even though we ideally want to fund the SDLIC in 5 to 7 years, it is also possible to continue funding the contract well into the future. An unique aspect to the life insurance we utilize is that it operates as an and asset. What does this exactly mean? Most assets generate a return when you leave your capital invested. For example, when you buy a stock, you earn a return while you own the stock. If you sell the stock, you stop earning a return unless you reinvest those funds elsewhere. In this instance, most assets are an or asset. You either earn a return in one asset or the other. To implement the and strategy with an asset, you need to be able to utilize one important financial concept: leverage. Utilizing leverage means you are able to borrow against an asset so that your capital is working for you in more than one place. This is not a new concept. Entrepreneurs have been implementing leverage strategies inside of their businesses for hundreds of years. Real estate investors accomplish this feat all of the time. And you can even use leverage when investing in the stock market through a margin loan inside of your brokerage account.
The key to the uses of leverage is measuring the amount of risk you are taking in the underlying asset and what are the terms of the loan that the financial institution sets up for you. These components, coupled with the conservative nature of mutual insurance companies, make the use of specially designed life insurance contracts very appealing when you understand the power of your own privatized banking system. Utilization strategies can be consistently optimized in your financial picture when an SDLIC is a cash flow tool made available to you. Accessing your cash value through policy loans is a very powerful and often misunderstood tool at your disposal. We have found that educating our clients about the ways traditional loans from a bank work and comparing that process to SDLIC can demystify this strategy. Making 3 to 4% tax-free over your lifetime on capital inside of your private banking system may not sound like that big of a deal, but what if that return was on top of the returns you generate in your business or in your real estate investments or in other areas of your financial picture. All of a sudden, this strategy can make a huge difference after 10, 20, or 30 years of utilizing your capital. Earning a rate of return in two places is your uninterrupted compound growth at work.
Our perspective on this topic is based on tens of thousands of knee-to-knee appointments with individuals, families, business owners, and entrepreneurial-minded people. We will not give you our opinion on this topic blindly with no consideration for your actual financial situation. Instead, we will educate you on the concepts and strategies that demystify cash value life insurance as a financial vehicle with tremendous potential to provide flexibility, access, and control of your money. If designed properly and monitored frequently by a financial professional who is properly trained in cash flow strategies and alternative asset classes, your opinion of cash value life insurance may change significantly. If you are ready to learn more about how you could potentially benefit from this concept, we encourage you to explore our website in more detail. Thank you for your willingness to think differently.